Have you ever felt completely overwhelmed by the idea of investing? You know it's important for your future, but where do you even begin? Stocks, bonds, crypto, real estate? It all sounds incredibly complicated. Maybe you think investing is only for people with huge amounts of money or those who are financial geniuses. That's a common misconception, and it's simply not true. You absolutely can start investing today, even with a small amount of money. The world of investing can feel like a foreign language. You encounter jargon like ETFs, dividends, bull markets, and bear markets. Charts look confusing, and the fear of making a mistake or losing your hard-earned money is very real. Beginners often ask the same questions. Where exactly do I start? What if I make a mistake? How much money do I actually need to get going? These questions are valid and they often lead to inaction. The biggest hurdle for most people isn't a lack of intelligence or money, it's the fear of the unknown. This fear causes paralysis, preventing them from ever taking that crucial first step. But it doesn't have to be that way for you. My goal today is to cut through all that confusion and show you a clear path forward. I promise to show you exactly how to start investing with confidence, even if you've never done it before. By the end of this, you will have a solid understanding of the essential steps needed to begin your investing journey, from shifting your mindset to choosing a simple strategy. You'll gain the clarity and motivation you need to finally start building your financial future. We'll cover practical questions like how much money you really need to start and what specific assets are good choices for a complete beginner. This isn't about getting rich quick. It's about building wealth steadily over time. You'll walk away with a clear plan and the confidence to take action. This could be the most important step you take towards achieving your financial goals. The very first step to successful investing isn't opening a brokerage account. It's changing how you think about money and growth. Investing is not a sprint where you try to make quick profits. It is fundamentally a marathon, a long-term commitment to building wealth over many years. Your focus should always be on the long term. Market prices will go up and down. That's normal. Successful investors understand this and don't panic sell during temporary market dips. They see dips as potential opportunities. Patience and consistency are your greatest virtues in investing. Think of it like planting a seed. You don't plant a seed today and expect a full-grown tree tomorrow. You plant it, water it consistently, give it sunlight, and over time it grows into something substantial. Investing works the same way. You don't need to be a trading expert or predict market movements. You need a plan, discipline to stick to it, and the patience to let your investments grow over time. This mindset shift is the foundation of everything else. Let's immediately dispel a major myth. You do not need a fortune to start investing. This is one of the biggest reasons people delay or never begin. The truth is, you can start investing with surprisingly small amounts of money. Many modern investing platforms allow you to start with as little as $50 or $100. This is possible because some platforms offer fractional shares, meaning you can buy just a small piece of an expensive stock or ETF rather than having to buy a whole one. For example, starting with $500 is a very manageable goal for many people. It's enough to get started, diversify a little, and begin learning without feeling overwhelmed by risk. The most important thing is simply to start. Don't wait until you have thousands saved up. Start with what you can afford comfortably, even if it's just a small amount each month. The power of compounding works best when you start early, regardless of the initial amount. Given the vast number of options, where should a complete beginner actually put their money? The key is to start simple and focus on diversification to reduce risk. I highly recommend starting with ETFs, or exchange-traded funds. Think of an ETF as a basket containing many different stocks or bonds. When you buy one share of an ETF, you are instantly diversified across potentially hundreds or thousands of underlying assets. This is far less risky than buying stock in just one company. Look for broad market ETFs that track major indexes like the S&P 500 or a global stock index. Another option for beginners is investing in blue chip stocks. These are stocks of large, well-established, financially sound companies with a long history of stable performance like Apple, Microsoft, or Google. While not as diversified as an ETF, they are generally considered less volatile than smaller companies. Some beginners are curious about cryptocurrencies like Bitcoin. While it can be part of a diversified portfolio, it is significantly higher risk and more volatile than ETFs or blue-chip stocks. If you are interested, start with a very small amount you can afford to lose and do extensive research to understand the technology and risks involved. Avoid chasing hype or investing in obscure coins. Stick to what you understand and what aligns with your risk tolerance. For most beginners, diversified ETFs are the simplest and safest starting point. Many new investors lose money or get discouraged because they fall into predictable traps. Being aware of these can save you a lot of pain. First, avoid chasing hot stocks or cryptocurrencies based on hype you see online or hear from friends. These are often speculative bubbles that can burst, leading to significant losses. Invest based on research, not emotion or fear of missing out. Second, don't try to time the market. Predicting exactly when the market will go up or down is impossible, even for experts. Trying to buy at the absolute bottom and sell at the absolute top usually results in missing out on gains or making poor decisions based on fear. Third, never invest money that you cannot afford to lose or that you might need in the short term, say within the next 3 to 5 years. Investing is for long-term growth, and you need to be able to leave your money invested through market fluctuations. Finally, always do your own basic research. Don't blindly follow someone else's advice. Understand what you are investing in, why you are investing in it, and how it fits into your overall plan. Patience, education, and a solid strategy are key to success. So, you know you need the right mindset, you know you can start small, and you have an idea of what to invest in. How do you actually put money into the market consistently? The best strategy for beginners and even many experienced investors is called dollar cost averaging, or DCA. Dollar cost averaging means investing a fixed amount of money at regular intervals, regardless of whether the market is up or down. For example, you might decide to invest $100 every single month on the same date. The benefit of DCA is that it reduces your risk compared to investing a large lump sum all at once. By investing regularly, you average out your purchase price over time. When prices are high, your fixed amount buys fewer shares. When prices are low, your fixed amount buys more shares. This systematic approach removes emotion from investing and prevents you from trying to time the market. It ensures you are consistently participating in the market's growth over the long term. Start small, stay consistent with your regular investments, and let the power of compound interest work its magic over the years. This simple strategy is incredibly effective for building wealth steadily. Let's quickly recap the key steps we've covered. First, adopt the right mindset. Investing is a long-term marathon, not a sprint. Second, understand that you can start small, even with just $50 or $100, thanks to fractional shares. Third, begin by investing in simple, diversified assets like broad market ETFs or stable blue-chip stocks, avoiding hype. Fourth, be aware of and avoid common beginner traps like chasing hot stocks or trying to time the market. And fifth, implement a simple, consistent strategy like dollar cost averaging. The main message here is clear. You absolutely can start investing today. Don't let fear or confusion hold you back any longer. You have the basic knowledge you need right now to take that first step. I'd love to hear from you. What is the single biggest thing stopping you from starting your investing journey right now? Drop your questions or your biggest hurdle in the comments below. If you found this guide helpful and want more clear, beginner-friendly tips on building wealth, make sure to subscribe to this channel. We cut through the noise to give you actionable steps for real results. To help you take immediate action, I've created a free beginner investing checklist. It walks you through the very first steps you need to take to get started today. You can download this checklist right now by clicking the link in the description below this video. It's a simple tool to help you put this knowledge into practice. My mission is to empower you to take control of your financial future. Investing is a powerful tool for building long-term wealth, and it is accessible to everyone. Let's build wealth together, one smart step at a time. Download the checklist and start your journey today.